Hi, in this video you will learn how to analyze a company, a detailed business analysis of a company as enterprise, as industry, as financials, as valuation, and after that you will learn how to see technical chart pattern, and based on the technical chart pattern, if there is any buy call or not, all these things we will be discussing in this detailed analysis of a business. Myself, Dhiraj Mondal, a retired assistant professor and associate NCC officer, JIS College of Engineering and 2/49 Battalion Bengal, NCC Kolani. Currently I am a mutual fund distributor and serving my clients, and also founder Dipanti Wealth Management. So let's discuss today's detailed business analysis. Hi, I welcome to all of you to this session of detailed business analysis of a company named Sheela Foam Limited. Sheela Foam Limited, it is a company which is coming under small cap category, and currently the company has a market share of market capitalization of 7,205 crore. This company is a leading player in India's mattress and foam production industry and a leader in polyurethane, that is called PU foam, and it has a nationwide presence in manufacturing PU foam with a track record since 1971. So what are the product of this company? Let us discuss. So you know the mattress, comfort foam and home care product, furniture foam, and lots of things. You have seen there is a brand named Sleepwell, Carlon, Farlenco, Joyce, Interplast. So you have seen the product is very well known to our daily life. Sometime you have seen the advertisement in your TV channel. So the company is well known to us. So for the interior design for foam mattress, this company is associated with us, and every day we are using this product. So this company is right now trading at 663, and whether this company is in right valuation or not, this company is trading below 52 week high, 69% from 52 week high, that is your more than 2000, and from the 52 week high the company is right now trading, that is a lifetime high. From the lifetime high this company is trading below 69%. Right now you can see it is trading at 663. So why this particular fall we have seen, that also we will be discussing. You know that this product is essential for our daily life, and the company is holding 76% revenue from domestic business and 49% which was 69% in FY22, and in the mattress 49% coming from mattress, 20% from technical foam, and 8% from furniture foam, and others 23%. The export business is 24% in FY25 versus 31% in FY22. In Australia, 53% business from Australia, that means out of India, the business coming 53% from Australia and 46% from Spain, and the company has a IT division which is a smaller portion of profit is coming from that particular portion. So why this company is falling drastically from 2000 to 618, that is your 52-week low, and 52-week high is your 1067. That I will be discussing in this detailed lecture. So let us begin. Myself Dhiraj Mondal, a retired assistant professor and associate NCC officer, JIS College of Engineering, and currently I am working as mutual fund distributor. I am a SEBI regulated MP registered mutual fund distributor and founder, Deepanti Wealth Management. Let us begin. So Sheela Foam Limited is a leading player in India's mattress foam product industry and leader in polyurethane foam. It has nationwide presence in manufacturing of PU foam. So these are the product which you have seen. Let us discuss the overview of the company. Sheela Foam is a leader of PU foam and is a part of Sheela Group, which is multi-billion rupee entity. It has a nationwide presence in manufacturing PU foam with global marketing perspective and an impeccable track record since 1971, as we discussed. Some of the leading brands of Sheela Foam are Sleepwell, Feather Foam, Lamiflex, etc. In Q1 FY25, the company acquired business Carlon and Farlenco. So because of this capital expenditure, that is called capex, we have seen some sales shortage and some losses in the company. So there was some capital expenditure. Because of that, the company financials was little bit affected. There was another issue that we will discuss. Because of the raw material hike, the company also facing some problem. So we will be discussing step by step. The company enjoys strong brand awareness and a nationwide presence in manufacturing of mattresses, home comfort products, and technical grades of PU foam. The company also enjoys a significant presence overseas, with its being exported to over 20 countries worldwide. So other than India, the company is serving 20 countries worldwide, and we have seen there is some presence in Australia, Spain, and we have seen the market share also. The product of the company and its various brands earns the credit of being highly durable and of unmatched quality. These products are the outcome of the R&D effort of the company. A highly skilled team of engineers and scientists constantly strive to create pioneering product by leveraging best in class technology while ensuring supreme quality. So there is a R&D team which is working in the company to improve the design and quality of the product. Sleepwell, the flagship brand of the company, delivers on its brand promise of producing premium and customized product. Over the years, the brand has earned a formidable reputation of developing delightful product in line with growing consumer aspirations. Other brands of the company include Feather Foam and Starlight, which are low priced mattresses for consumers. These brands have enabled the company to augment its share in the organized mattress market. So Sleepwell, a brand which is having some pricing power, but there was some product named Feather Foam Starlight, which is a low price mattress because the company is working in a view that they can acquire the rural market as well, because there is a lots of unorganized player in the market where the company may lose the market share, so that they have to focus on the low price range mattress for the consumers. Let us discuss about the business area of the company. The company is leading manufacturer of mattress in India, marketed under its flagship brand Sleepwell. In addition, it manufactures other foam-based home comfort product targeted primarily at Indian retail consumers, as well as technical grades of polyurethane foam. In short, it is called PU foam, for end use in a wide range of industry. So these are the business area of the company. I have discussed the product part. In details, let us discuss the product part. The company produces mattresses named My Mattress, Spring Range, Technology Range, Comfort Cell Range, Back Support Range, Flexi PUF Range, Economy Range, technical product. So those who have back problem in West, they are having some product related to medical requirement. Now there was some product, home comfort product like furniture cushions, pillows, comforters, sofa cum beds, etc. Next, followed by technical foam product, which are automotive foams, reticulate foams, ultraviolet stable foams, sound absorption foams. So these are the product which the company is right now selling in the market, and each and every product has some essential value, so that we are consuming this product. The company is 50 years of market experience from 1971 to 2025. Let us discuss the milestone. In 1971, Sheela Foam Private Limited was founded by chairperson Mrs. Sheela Gautam. In 1985, they extended operations to Noida, which is a satellite town of Delhi. It is coming under Uttar Pradesh. And in 1993, process of liberalization started in country, and Sheela Group began rapid expansion. You know that when the finance minister was Dr. Manmohan Singh, at that time liberalization was coming. So this is the era where this Sheela group rapidly expanded. In 1993, the very renowned brand Sleepwell launched. So Sleepwell has a 30 years of market experience. 1994, acquisition of full placed plant near Delhi. In 1996, 2 more units added at Silvassa near Mumbai and at Hyderabad in Andhra Pradesh. So company is gradually increasing its units. In 1998, company introduced rubberized coir products under Starlight brand. So new brand Starlight, it has introduced some product under Starlight brand. In 1999, company tie-ups with Sharta US and Dunlopillo UK for manufacturing mattress. So with United States and United Kingdom, the company tie-ups to manufacturing the mattresses. 2001, they set up India's largest PU foam producing plant at Greater Noida. Coming to 2022, company expanded operations in north from plant at Rajpura, Punjab. Another plant company set up. Another in 2003 set up a manufacturing unit in Sikkim. So after 1 or 2 years, every 2 years company setting up plants one by one. So the company is growing, we can say. In 2005, company acquired polyurethane and polystyrene business of Joyce, Australia. So the company, this brand Joyce, here. So Joyce Foam is Australia's leading foam maker. The company in 2005 acquired the polystyrene business of Joyce, Australia. Now coming to 2006, joint venture with Woodbridge Group, Canada for manufacturing molded PU foam auto components. Followed by 2008, joint venture with A.H. Beard, Australia for manufacturing spring mattresses. In 2008 again, revolutionized mattress retail with launch of Sleepwell walls and galleries. 2010, the launch of revolutionary technology with impressions, latex plus, Resitec Air, Duet Luxury, Durofarm, Serenity, Amity and many more. So how the product, new product is coming in every year almost, we are experiencing that particular part. Next, in 2012, a new state of the art unit in Erode starts operation to cater to the southern market. Next, for 2013, the company expanded production capacity at Kala M in HP. In Himachal Pradesh, company expanded its capacity at Kala M for northern market actually. In 2015, they launched of Sleepedia, an initiative by Sleepwell to raise public awareness on importance of quality sleep as a means of good health and well-being. So you can see the company right now selling its product with the emotion of human health. If some emotions on health is included in the product, then there is a possibility to tie up with doctors and they will refer this product for the respective patients. So this is how market is captured. In 2015, company launched a perfect match, a revolutionary concept that uses world-class sensor bed to recommend the perfect sleeping surface for every individual body type. Again, this product was a revolutionary product and sales was drastically increased. That we will see in the balance sheet, in the profit loss statement, in the revenue part. In 2015, the company introduced My Mattress concept that enables a customer to choose the right mattress for themselves. In the same year 2015, a new state of art unit in Siliguri starts operation to cater to the eastern market. Company is coming in the West Bengal region also. Initially it was Sikkim, now Siliguri. In 2016, company got listed on NSE and BSE. So whatever the information we will be getting from 2016 for the company share price, it is trading from 2016, and you can see in 2015, 15, 16, 17, 18, 19, 20, 21, 22, 23, then 24, how the sales increased from 1092 CR to 2092 CR, now trailing 12 month 3435 CR. So these are the milestone we have to know, because the company should have a track record. Otherwise this company is trading at 52-week low. Whether we have to invest or not, that call has to be come from the future, past of the company, whether the company is able to generate money or not. Coming to 2018, the company launched of economy product range and e-commerce. As you know that there are lots of unorganized player and they are directly selling their product in the online platform without any quality. So company tried to start its e-commerce marketing with competitive price so that they can acquire the market from online space also. In 2019, footprint in Europe, the company acquired Interplast SL in Spain. So again in the Spain, the company trying to increase its market cap, and it is shown in the business part 46% in H1 FY25 versus 50% in FY22. So there is a business expansion what we have seen here. Now let us discuss about the award and recognition. These are not so important, though we have to know that the company is recognized by something, some award, some organization. 2017 OWN CIO 100 award, 2018 CNBC NASSCOM IT User Award 1910, 2009, 10, 11, 12, 14, 15, 17, 18, 19, 20, 2019-20 India's best mattress brand of the year 2020. So these are the few awards you can read here. Now let us discuss about the business or enterprise overview. There is some positive points and negative points. So we will be discussing one by one. Sheela Foam Limited is a leading player in India's mattress and foam products industries and a leader in polyurethane foam. Already it is discussed this point. It has a nationwide presence in manufacturing PU foam with a global marketing perspective and an impeccable track record since 1971. Already this point discussed. The product has some brand named Sleepwell and Carlon, the flagship brand for mattresses and comfort accessories. Feather foam, a pure PU foam. The company estimates its market share in the organized mattress market to be 29% to 30%. Lamiflex, a superior quality polyether or polyester foam for lamination. The company has a market share of 28% in mattress segment via Sleepwell brand. With more than 2,800 employees, 11 manufacturing facilities, a nationwide network of 110 distributors and 11,500 dealers and export relations with 25 countries, the company has established a strong global presence and deep connection with the consumers. The market share, total market outlet is like this: exclusive brand outlet 6,100 plus, where Sleepwell has 5,600 plus and Carlon 500 plus. It has some multi-brand outlet MBOs 12,000 plus, where Sleepwell has 7,500 plus and Carlon 4.5 thousand plus. Under the multi-format approach, Sheela Foam has 440 Sleepwell World, that is large size store, and 1106 Sleepwell Gallery, that is medium size store, and 1114 Sleepwell shops, that is small size store. So we can see the company has a large size, small, medium size and small size stores, and the company is having some motto to expand its business for the growth. A well diversified segment sales breakup as of financial year 2024: mattresses 47%, technical foam 21%, furniture cushioning 10%, comfort foam and AC line 17%, and others 5%. So the product diversification is across every section: mattress, technical foam, furniture cushioning, comfort foam, etc. During Q1 FY24, the company made two acquisitions involving 94.6% stake in Carlon Enterprise Limited. Very important point. Company owned Carlon Enterprise Limited in 2024 quarter 1 and 95% almost stake, and 35% stake in Farlenco, owner house of Kiraya Private Limited, and it is acquiring 94.66% of Carlone Enterprise Limited at an equity valuation of 2150 crore. So 2150 CR valuation given to the Carlone Enterprise Limited. So that is why we can see in the cash flow statement, cash from investing activity, purchase fixed assets, here you can see here 2349 CR fixed asset purchase, that is in 2024. Why? Because company acquired Carlone and Farlane Co. Whenever the company is acquiring something, then it is nothing but a investment in land, investment in buildings, investment in machinery. It is taken as negative as the cash is coming from company's account to this company Carlone or Carlone owners. So the cash outflow is there, that is why it is negative, and this is the reason the company's revenue or profitability suffers, one of the reason. So for the capital expenditure purpose, the company bought this particular company Carlone and Farlane. So company wanted to be grow in coming future. The company's in-house IT wing named Stacko has grown significantly from 16 CR business in FY23 rupees 23 CR in FY24, generating 20% to 25% EBITDA margin. You know, the company is having its own IT service, and they are also providing service to others company also. So name of the particular IT companies or Stacko. The business not only serves Sheela Limited Group companies but also others company, and is significant revenue growth we can see from here. The company aims for a 15% growth, 15% CAGR growth in the mattress segment with a focus on both volume and value growth. During the quarter Q1 FY25, the management shut down 2 factories to run its operation efficiency. Consequently, the company will able to reduce fixed costs. So in Q1 to FY25, the company shut down 2 factories, and why this reason? Why? Because of the capital expenditure and as well as raw material price hike. We will be discussing in the negative part. As at Q1 FY25, the estimated distribution outlet are 7,000, of which 3,000 are EBO and 4,000 are MBO. During the quarter, the company added 700 outlets. The management has divided the country into 2000 micro market, with each market having a different distribution plan. The management plans to increase the channel points by 10% in FY25. So these are the positive points as enterprise, as business. Every business have some negative point also. Let us discuss that part. And most important part is the price of raw material for foam, that is polyol and toluene diisocyanate, doubled during the year 2020 to 21. So this raw material price was doubled in 2020 to 21 due to supply chain issue, temporary shutting down of some global plants, etc., which continued to 2022 as well. The raw material cost was eased during 2023, resulting in gross margin expansion. Let us justify this point. What happened in quarterly result like 2022-21? You can see here the expenses of the company, how it is increased. 18,121 CR to 2073 CR to 2,550 CR, 2,575 CR. So material cost, you can see material cost, the raw material cost here, how it is drastically increased. 1000 CR to 1800 CR. So because of this raw materials cost, the gross profit margin reduced. How we can calculate the gross profit margin? Let us discuss. Here you can see this is the sales and this is the expenses. So sales expenses by sales is your operating profit. So sales or revenue minus expenses called your operating profit. Now 2073 divided by 2024, 2437. So it is 85%. So it is your operating profit. Basically what happened, 1 minus 1.85, that is 15% gross profit margin. So 1 minus 0.85 means 15%. So the gross profit margin of the company is 15% here. So that point is basically written here. The raw material cost was eased during FY23, resulting gross profit margin expansion. So gradually the gross profit margin was expanded, but initially there was a shrink in gross profit margin because of the raw material issue. So the material cost must be down, and it is seen here 57% material cost, and here it is 63%. So it is gradually in the downward level. Here you can see the company's expenses was increased because of the raw material price. So in the profit loss statement, sales is nothing but the revenue growth. Revenue, the company is selling some product and getting some money, so that is sales. If I am subtracting expenses, then we will be getting operating profit. Then operating profit divided by sales, I will be getting operating profit margin. Then after that add the other income, then earning from interest, then depreciation amortization, we will be getting profit before tax. So from operating profit, if this particular part is other income, interest, depreciation, if I am subtracting, I will be getting profit before tax, and after giving tax to government, I will be getting net profit. So this is how the balance sheet you can read. So the profit before tax is also called EBIT, earning before interest and tax. Or operating profit is also called EBITDA, earning before interest and tax and depreciation amortization. So first of all, revenue or sales minus expenses, EBITDA, earning before interest, tax, depreciation, amortization. that is called operating profit also. And if I am subtracting this operating profit from the other income, interest, depreciation, then I will be getting EBIT, earning before income tax. So profit before tax. After deducting tax, I will be getting net profit. So whatever the net profit I am getting, so net profit by number of shares, I will be getting EPS, earning per share. So this is how we can read. So here the negative points as enterprise, the raw material supply chain was disrupted, and there was, because of that issue, there was a temporary shutting down of some global plants, and after that this particular issue is balanced. And next point, the raw material cost of the company is around 70%. The key raw material are manufactured from the byproduct of crude oil. Hence the price of crude oil has a direct impact on the profitability of the company. So the raw material cost of the company increased, which was 70%, and key raw material of the byproduct is your crude oil. So the price of the crude oil increased means profitability of the company will be in decreasing order. So this company is very much dependent on crude oil product or byproduct. We have to keep it in our mind before investing in this particular company. If there is some raw material or crude product price hike by the country who is they are supplying, we will see this particular company will shrink or the profitability will shrink. So this is the not only but one of the most important point to understand this business. Since more than 1/4 of the revenue comes from export business, the company is exposed to foreign exchange rates. So here basically 1/4 of the revenue comes from export business. So company has some foreign exchange rates also. Intense competition in the mattress industry, especially from online brand and unorganized players, as we discussed earlier. Demand slowdown in domestic as well as exporting nations, leading to slower revenue growth. So if the demand is slow down, then already it will be reflected in the revenue growth. Let us discuss about the industry overview. Some positive points, like India's overall mattress market has grown at CAGR of 11% the last 5 years and is expected to register a CAGR of 11.43% from 2021 to 26. The Indian mattress industry is classified into two categories: cotton based mattress and modern mattress. The overall industry is pegged at rupees 50,000 crore with significant dominance of the unorganized cotton based mattresses industry. So the growth of this particular sector is about 11% and it is expected to grow in 2021-26, that is 11.47%. So the growth number is about 12%, that is our GDP, real GDP and inflation number. So 12% growth, 12 to 15% growth is very good number. So this industry will be growing as the surplus money or the per capita income of the people who are living in India, if it is increased, then automatically they will spend money in the luxurious segment, or this lifestyle inflation will be increased, so this company will grow automatically. So this industry is 50,000 CR dominance, and under overall industry is basically 15,000 CR. And cotton based mattress and modern mattress are two segment or two category which is in the market available right now. As of 2024, the Indian mattress market is estimated to be valued at approximately 17,600 CR, with projection to reach around 26,500 CR by 2029. So huge growth I can see here. This reflects a compound annual growth of 8.54% during the forecast period 2024 to 29. The Indian modern mattress market grew by 9% during FY18 to FY23. The Indian mattress market is expected to demonstrate strong growth owing to consumer driven factors such as increasing population, rising urbanization, and an increase in disposable income. India's flexible PU foam market has reduced rupees 11,000 CR by 2023. The online Indian mattress market in FY22 is estimated to be around rupees 1,000 CR and is projected to reach rupees 1,500 CR in FY23 and rupees 6,000 CR by the turn of the decade. Within 10 years, the online market, Indian mattress market, will be 6,000 CR. User under penetration is growing at a similar rate and is expected to hit 65.6% by 2025. The key growth drivers of India's mattress industry is shift in product preference, increased awareness of quality mattresses, demand for innovative products, growing awareness of branded products, shift to an organized market, growing consumerism, greater spending propensity, and growth in end user industry. So these are the key points which will drive the market to the desired level. And as we know, the tax, there is a 12.75 lakhs tax relief by Finance Minister Nirmala Sitharaman. The disposable income and the spending power of the salaried class as well as middle class of India is increased. We will see some fancy item or some consumer durable items in our house for better comfort. Next point, the organized branded mattress industry accounted for 29% of market in FY14, touched 35% by FY19, and is now expected to be 40% of the market by FY24. So the organized player is gradually will grab the market from unorganized player because of the trust issue and the brand value. If the product quality is good enough, then people will choose the product although in higher price. Sometimes quality of the product will win. The Indian foam industry's future seems promising with increasing opportunities in various applications such as building and construction, bedding and furniture, transportation, electrical and electronics, footwear and others. The major growth factors for this market are growth in the bedding and furniture industry, high demand for PU foam, and building insulation for energy conservation, and increasing automotive production. So these are the future scope because of this opportunity. Let us discuss next point. The India furniture industry is estimated to be at a value of around 80 billion USD by 2025 with an expected CAGR of 13%, while the furniture rental industry is at a nascent state and is estimated to grow to USD 11 billion by 2025 with expected CAGR of 26%. The salaried class, those who have movable job, they will not going to buy a furniture or mattress, rather they will try to take it by rent. So gradually we will see a market where furniture will be taken as rent. So after using the product, they will give it to the owner of the product. That means like a home, you are renting a home, a furniture also you will be renting, and rather you will buying the product, you will rent the product. So this market is in the primarily right now it is in the very less market for rental industry, but it will increase day to day. There is some negative points as industry. The domestic mattress industry, which is heavily dependent on retail business, has been facing a subdued demand due to screeching halt in the business because of the COVID-19 pandemic and high inflation situation. Because of this situation, there was some shrink in the business, and the PU foam and mattress being voluminous creates a challenge for warehouse and transportation. So these are the 2 points which are negative. Next, let us talk about the governance. So governance overview, the positive points are strong promoter holding of 65.69% as of December 2024. The promoter cut down its stake around 7.5% in Q2 FY24 to fund the recent acquisition House of Kiara and Carlone. So we can see the investor participation 72.95%. Now here there is some 7.5% share diluted by the promoter group, but because of the acquisition purpose of Carlone and क्या रहा? हाउस ऑफ किराया. So a strong promoter holding we can see Tushar Gautam, Rangoli Resort Private Limited, Rahul Gautam, Namita Gautam, Core Molding Private Limited. These are the promoter group. So very strong promoter shareholding pattern I can see here. And also the domestic institutional investor shareholding increased from 19.4% in September 2019 to 21% in December 2024. You can see here in the DII part the stake increased. So right now 21.17% stake. And what are those DII? SBI Magnum Mid Cap Fund, SBI Small Cap Fund, Kotak Emerging Equity Scheme, DSP Mid Cap Fund, Nippon Life India Trustee Limited, Kotak Small Cap Fund, UTI Flexi Cap Fund, SBI Life Insurance Company, DSP Small Cap Fund. So these are the institutional investors. Those are who are believing that the company will grow and they are bullish on this particular company. Also foreign institutional investor stake increased from 6.56% to from 3.21% in 2023 to 6.56% in December 2024. So right now DII investment is 6.23%. You can see here Kotak Fund India Mid Cap Fund, that is FII, also have some share. So only 6.9%, that is almost 7%, 97% share is in the strong hand. So this is a positive sign for governance point of view. Institutional investor hold around 84% of the free float market cap. The earning quality ratio, very important, over the 6 year is 99.46% for the company, which falls under the ideal range. What is the ideal range? 80% to 120%, and the company's earning quality ratio is 100% almost. The company has contingent liability of 2% as of March 2024. This is also a positive sign. Why? Because contingent liability is basically some expenses for some what we can say, some court case and all this. But if the court case is company is win, then this particular fund is your positive part. It will be coming to the company's income part. There is some negative news as governance. What are those? In last 1 year, receivable has increased by 19%, whereas revenue has increased by 7%. What does it mean? Trade receivables, it is also a parameter which we have to look it. You can see the cash flow from operating activity here, trade payable, and in the balance sheet you can see some statement, cash equivalent, trade receivables here. So in the balance sheet I can see some trade receivables of 386 here. What does it mean? The company already has sold some product, but the money or the particular money is not coming into the company's hand. If it is coming, then okay. If it is not coming, then there is a red flag. That means company is selling something, but cash is not coming into company's bank account. So 386 CR of trade receivable, this is a very bad sign. Company also have a bad sign of borrowing. Borrowing is 1400 CR. So let us discuss. So this is your negative point. Trade receivable 19%, increased by 19%, but revenue growth is 7%, a very negative point. Also a very negative point is your audit fees of the Sheela firm has grown by 10%, whereas revenue of the company has grown by 7%. So why this is happening? Are the company trying to hide something by paying a smart money, paying a good amount of percentage of money to the audit person? So that is also questionable part. Let us discuss about the financials. Some positive points are high single digit sale growth in last 3 years and 5 years on a CAGR of 9.8% and 7.9% respectively. Low debt to equity ratio of 0.44 as of FY24. So sales growth, I can see here in the profit loss statement, sales is in increasing order. Last 3 quarter sales, I can see it is in increasing order, and from 2013 onwards the sales is increasing order. And also the debt to equity ratio, come here, debt to equity ratio 0.44 right now, 0.48 right now. So the company is having some debt, but it is in the reasonable price. So debt to equity ratio is your 0.44. It should be always less than 1. Company has good interest coverage ratio 4.73%. So the whatever the debt company has, they are paying the interest, and they can easily pay the interest that can be told from this particular part, interest coverage ratio. In Q2 FY25, Sheela Foam's management project 5 to 7% growth in the Australia business and double digit growth in Spain business over 2 to 3 years, with consolidated business growth expected 12 to 14%. So they are projecting some growth outside India, and overall consolidated business growth 12 to 14%. In Q3 FY25, Sheela Foam Limited reported a 10% growth year on year in revenue, reaching 967 crore. The Sleepwell brand saw 53% year on year increase in volume, while Carlon recorded 13% year on year growth. Overall, the B2C segment expanded by 24% year on year. So this is also a positive sign for financial point of view. In Q3 FY25, EBITDA, that is earning before interest, tax, depreciation, amortization. What do you mean by that? That means company is earning before tax. What are the earning before tax? That is your operating profit. Depreciation means whenever your company is buying some accessories like computer, chairs, table, car, like these are the product which is depreciable product. So depreciation, the company is suppose bought some product which is 174 crore. So what is happening in the balance sheet, like company bought some accessories of 100 crore, it will be reflected in 10 years time frame. That means 10 crore in every year. All the money is already spent, but for the tax harvesting purpose, the company will display this depreciation in 10-year time frame, assuming that the product lifespan is 10 years. So this is your depreciation part. If the company is having some software, that is intangible asset, then it will be coming to the amortization part. Amortization means after 3 years the company software will be lapsed. So it will be coming to the amortization part. That means there are two type of asset: tangible asset and intangible asset. Tangible asset means those who you can touch, you can see, but intangible asset means like your software or security backup, software security, antivirus, lots of things. So In Q3 FY25, EBITDA include other income stood 88 CR, making 16% year-on-year increase. However, EBITDA margin were impacted primarily due to rise in raw material cost affecting the domestic business. In contrast, international business margin remained stable. The management plans to reduce debt by monetizing Carlon's non-core asset and utilizing internal cash flow. In FY26, only maintenance capex will undertaken, ensuring that surplus cash is directed towards debt repayment, ultimately leading to an involvement in PAT margin. So the company recently acquired some business, and after getting profit, the company will reduce the debt and it will impact the PAT margin, that is profit after tax margin. So these are the some positive financial outlook. Next, negative part is muted profit growth. 3-year CAGR and 5-year CAGR is 1.3% and 8.5% respectively. So the company profit growth, compounded profit growth, here you can see 5-year 1%, 3-year minus 15%, compounded profit growth 10-year 17%. So here some negative points we can see: a muted profit growth. Return on capital employed of the company has declined from 34% in FY14 to 10% in FY24 because its continuous capex is yet to deliver to return for the company, as well as reduced EBIT in FY24 due to demand slowdown. So ROCE of the company we can see here, it is 7.97%, very less, and ROE 6.09%. So return on capital employed is your ROCE, return on equity it is called ROE. So this is not a healthy sign. The number is very much unattractive. So as the ROE and ROCE is very less attractive, the company declining return ratio ROE fell from 22.8% in FY21 to 17% in FY22 and finally to around 8.61% in FY24 due to reduced profitability. Profitability as it is reduced, the company's ROE and ROCE fell. Over the last 4 years, Sheela Foam revenue has grown at a CAGR of 8.19%, but operating expenses have increased by 10.44%, leading to a 7% decline in EBITDA margin. This rise in expense has also impacted PAT margins, contributing to a gradual compression in overall profitability. So this is also a negative sign in terms of revenue growth and company's EBITDA margin decline, that is 7%. Next negative point is in Q3 FY25, Sheela Foam Limited reported PAT of 19 CR, reflecting 40% of year-on-year decline, with PAT margin with 2% negative. Despite 10% revenue growth and 15% EBITDA, profitability was impacted due to the acquisition of Carlon and Farland Co. So as you know that there is a acquisition, an acquisition, so this particular thing is related to this part, acquisition part. So we can take it negative or positive or a mediocre term. So before investing your hard-earned money, you have to think about this negative part also, because whenever you are investing in a company, then you are the owner of the company, and for the long-term point of view, if you are investing, then there must be some concern or issue or negative points you have to recognize, so that after any issue, it has to be in your mind that it is well known to me and this risk was associated with this particular product. So don't do no issue, and you have to have some long term view, otherwise you cannot make money from this market. Let us discuss the valuation part. As of 14th May 2025, the stock is currently trading at 84.6x, which is trading higher valuation. Its median P, higher valuation to median P of 3 years and 5 years is 60.02, 0.2 and 57.5 respectively. Let us see the P ratio. Here you can see 5-year P is your 57.5 and median P, and right now the P is trading 84.6 and 3-year median P is your 60.2, but right now it is overvalued. As you know that in the balance sheet there is some profit contraction here. You can see from 250 CR to 240 to 140 CR, and there is a EPS contraction. So that is why the company's P ratio, profit to earning ratio, it is increased. So P ratio, if it is coming below 60, then the company will be in the value, the price of the company will be in the increasing order. So there may be some price correction in near future, but there is some future growth outlook. If you have 2-3 years time frame, then there may be some potential gain in the company, that we will be discussing in the technical part. So right now the P ratio is 84, it is overvalued. The company is right now overvalued price based on the P, 5-year and 3-year median P. One of the underlying risks of such valuation is that the derating of P multiple may lead to fall in the valuation significantly if expected growth from the company is not materialized. Actually, the company P ratio will be derating, and as a result the company share price will fall. You know that value in the financial chart, the quarterly result is showing a 9 CR to 19 CR net profit growth, which is a good sign. But here you can see 63% tax given to the government last quarter, right now here 14% tax given. So these are the things which the profit is increased and it is shown by the audit department. So auditor is doing a very smart job here. So this 25 CR to 21 CR, the profit before tax is decreasing order, but the profit after tax is in increasing order. So I don't know what is the issue here. Generally the average tax is 25 to 30%, you know, but here 14% tax given. Maybe there is some losses which company booked for the other income, other investment. We will see here actually company has some other income or not, other asset or not, but this is the concern issue. Why this 63%, this 14%? So you have to read the annual report also. So this is basically, you can see the financial year 2020 annual report. This report you have to read, and this rating also you have to read, and con calls you have to read, so that you will be getting a clear understanding. Sheela Foam's EPS, earning per share, is expected to improve owing to following reason. The earning per share will be increasing if there is, you know that there is some positive outlook because there was some acquisition. So during Q1 FY24, the company made 2 acquisitions: Carlon, a mattress brand, and House of Kiraya, an online furniture brand. Post acquisition, Sheela Foam Limited would strengthen its competitiveness in the mattress market as well as enter the furniture market. Focus on market share gain. Sheela Foam Limited market share in South and East India has room for improvement via Carlon acquisition versus North and West India, where it enjoys 40% market share. So in the East and South, the market share has to be improved, and it will be done by the help of car loan acquisition. The merged entity aims to capture market share across organized, unorganized and untapped segments. Potential opportunity to reduce raw material spending for combined entity might result in margin expansion. If the raw material price is reduced, then the company's gross margin will increase. So as a result, company will be profitable and the earning per share will be in increasing order. The consolidated gross margin has risen from 36% in Q1 FY22 to 43% at present. The management anticipates further improvement in the margin in the upcoming quarters. So the consolidated margin has risen 36% in Q1 FY22 to 43% at present. So it is a positive sign for EPS improvement. A robust distribution network, Sheela has a higher presence in EBO while car loan has a higher presence in MBO, and production efficiency, better servicing of customers, cost saving, reduced cost to serve and manufacturing cost are synergies expected by the management, and this company is paying zero dividend yield. The impact of synergies of recent acquisition and impact of the recession in the international business might impact the coming quarter for the company. So these are the points which are responsible for EPS growth. You know that the company is paying zero dividend to customers because the company is in growing phase. Why this particular thing zero dividend? Because the company is having some acquisition, and if there is no scope of expanding the business, then the profit the company will be paying some dividend. So it is a positive sign because it is a company which will grow or which want to grow. So that is why this dividend yield, it is also a positive sign to expect the improvement of the earning per share. So here basically this is about the Sheela Foam Limited, about the business, the financial ratios you can see from the screener.in, and how to read this financial ratio. It will be discussed gradually. You have to be patient, and this total thorough lecture, if you are listening, then it will add value to your life. How to analyze a business. These are the quarterly result, and recent quarterly result showing 9,767 CR of sales, which is improving from 810 CR. So it is a good sign. The quarterly result showing the net profit is 9 CR to 19 CR. Profit loss statement, you can see the revenue or sales is increasing order. Operating profit almost same for last 3 years, and net profit also in between 200 to 140 CR. The company's recent quarter, the earning per share increase from 0.90 to 1.6673, but year on year the earning per share is in decreasing order. But if the next quarter is the profit or the earning is increased, then it will be improved. That basically analyzed in the EPS improvement section. You can see the balance sheet. The company's equity capital 54 CR and reserves increased day by day. Company's long term borrowing 742 CR and short term borrowing 496 CR and total borrowing 1436 CR. And based on the borrowing, we can see there is some asset of 1300 CR, where inventory 400 CR and trade receivable 386 CR. So the company little bit there is some borrowed money, but it can be balanced by the help of the other asset the company is having. This is the cash flow statement, and you can see cash flow from operating activity is your positive 406. So cash flow from operating activity, from cash flow statement, you can say that the company's cash from sales is coming into company's home. And cash flow from investing, there is a huge investment of on car loan 2349 CR fixed asset purchase. So company is in capex mode. The ratios are debtors day 45, inventory days 73, cash conversion cycle reduced, good sign 34, and working capital days reduced 7. Only concern is your ROC, but it will be improved in the future when the company will be full working mode. Shareholding pattern says that the company is having a 94%, 93 to 4% promoter DII and FII holding. That is a strong shareholding pattern. That means smart money, they don't want to dilute their share. So company is having some future growth outlook. There is some cons. Though the company is reporting repeated profit, it's not paying out dividend. The company has delivered a poor sales growth of 7.62% over last 5 years. Company has a low return on equity of 10.5% over last 3 years. Earning include an other income of 171 CR. That is also a negative point. From other income there is some income is coming, but from the main business the income is not coming. And promoter holding decreased by minus 7.26%, but it is only for the capex purpose. PR comparison, some company named KDDL Limited, Timex Group, Pokarna. So these are the PR group who are the competitor. Here you can see from this particular PR. So here these are the competitor: Global Surface, Stanley Lifestyle. So here you can see these are the, and based on this particular PR group, the company is overvalued. So median P is your 29.91, but company's P is your 84. So company is still overvalued right now. So let us see the next quarter result, and based on the next quarter result, we can invest or we can take our calls. Right now company is trading at 52-week low. So maybe the company share price will fall in the recent future, but it has a minimum 27% mid-term target and 75% long-term target, and if it is achieving the lifetime high, then it is 200%. So what is the conclusion? As per the overall business analysis, we can conclude company was facing some business issue, and as a result the price of key raw material for foam, polyol and toluene diisocyanate doubled during the year 2020 to 21 due to supply chain issue. The company was temporarily shutting down of some global plants, etc., which continued to 2022 as well. The raw material cost was eased during 2023, resulting in gross margin expansion, and the recent quarterly result showing sales of 967 CR, which is improved compared to previous quarter sales of 813 CR. And it is also observed the quarterly net profit of the company was down, but recent quarterly result showing net profit of 19 CR, which is jumped by 111% compared to previous quarter. The company is trading 69% below lifetime high, and current quarterly result is in a positive track due to capex and raw material price hike. There was a revenue contraction, but it might be a temporary event. Hence, we are expecting 75% gain from current market price of 663 within a minimum 2 years of time period. So these are the ratings. If you are searching the company, this is SFL NSE code and BSE code 540203. This is coming under consumer durable sector and category small cap. Today's date is your 14 May 2025. The rating is business or company out 9 out of 10. Industry parameter 9 out of 10. Governance parameter 9 out of 10. Or I can see here financial parameter 7 out of 10. Valuation parameter 6 out of 10. So this is a very negative point. Valuation is still overvalued. Financial is gradually, the quarterly result is good, but yearly result is not so good. That is why the company is in the trading in the lifetime low, 52-week low. So 8 out of 10. So this is your overall company discussion. But if you are investing in this company, then it is your own call. Don't take this is an investment advice. This is only for educational purpose. Never, if you are investing, then never invest more than 5% of net worth in a single stock. Don't invest money in equity market, which is required within 3 years. Don't invest borrowed money in the equity market. Don't invest money based on tips. Don't invest a single rupee if you are unable to understand the business. There is always a risk of capital erosion in the market, and we have to be ready to face those circumstances. So portfolio diversification is always advisable. This report is analyzed by Dhiraj Mondal, a mutual fund distributor and founder Dipanti Wealth Management. This is the phone number for WhatsApp number and email ID. You can reach to me if you have any doubt or any other query. This information, all the information sourced by Skinner.in, Invest Idna Academy and TradingView.com. These are the disclaimer. No buy and sell recommendation of this product. It is strictly for educational purpose. So today up to this, I hope you have got some value in your life, and if it is adding some value, then please subscribe my channel Dhiraj Mondal and follow me in the Twitter. Okay, thank you. Today up to this, next video will be meeting. So what about my analysis? If it is added some value in your life, then don't forget to subscribe my channel Dhiraj Mondal and share it with your friends, family, and press the bell icon to get everyday notification, and also follow me in Twitter, so get everyday real time update. There is no recommendation to buy and sell of any product. It is only for educational purpose. Please take advice from your financial advisor. Thank you.